Do it. Hello. I haven't. Very unprofessional. I didn't have my mic ready. Hello, traders. How are you? Welcome back to Simply Forex. I hope you're all good. You can see we're joined by Luke from LAGFX. Luke, how are you?
Not so bad, thank you. Thank you very much for having me on again. Pleasure to be here.
Yeah, by demand, Luke. They loved you last time. They wanted more Luke. So here we go. But before we start, guys, I just wanted to say a massive thank you to all of our subscribers, all of our viewers, because Simply Forex has hit 20,000 subs. Woohoo! So yeah, guys, couldn't do it without you. Thanks for all your support over the last couple of years or so. Here's to many more years of doing this crazy game called trading. So yeah, that's the good news, guys. Just wanted to mention that. Also, we've had Luke on the show before. Some of you might recognize him. If not, and you enjoy his analysis that he's going to give us today, then please check out all his links below this vid. He's got some great analysis, some great trade ideas, which we're going to have a look at today as well. And also, guys, just to mention, today's live stream is sponsored by My Flash Funding. All right, so if you're looking for a prop firm challenge right now, then look no further, guys. My Flash Funding, we're giving you 25% off any challenge if you use code SIMPLY. All right, so code SIMPLY on checkout, guys. If you're up for a prop firm challenge. So Luke, how are you, mate? How you been since our last time we met? How's the trading going?
Not so bad. It was good to see as well, actually, the GA trade that I did some analysis on the last time we touched base played out really well. I think that turned out to be a 6 RR trade, so 6% risk and 1%, which is not too bad at all. It's been good. Yeah, it's been a good few weeks. Just been obviously busy with the guys over in the VIP chats and things of that nature. So just keeping myself busy. It's been good.
And you've put yourself under pressure, Luke, with this 6 risk to reward. 6
I
times
know.
risk to reward. They're expecting another one now.
I know. Well, that's it. We'll see.
So, mate, without further ado, because they have enough of listening to me and looking at my charts. If you share your charts, Luke, and take us through. Potentially, you're in a trade right now, I understand, and perhaps a couple of other things you're looking at. And while Luke shares his screen, guys, if you could all get as many questions as you like over to Luke, it can be anything, guys. It can be questions about a currency pair you're in, or it could be about strategy, risk management, psychology, anything, guys. So really pick Luke's brain while he's on the channel. Ask as many questions as you like. So, Luke, over to you, mate.
Yeah, so I mean, I'm obviously short on AUD USD. It was a trade that I got in on last Thursday. Quite a slow start, but I mean, you can see now, just today, really, it's really picked up this short on AUD USD. The reason for this was because we had the penetration of an area of supply, an area of interest of mine. And I was delivered with the right confirmation and confluence in order to actually place a position. So what I'm looking for once price trades into an area of interest, whether it's a demand zone or a supply zone, is some kind of structure break. A structure break obviously confirms to us or gives us the confluence to suggest that the trend that was trading us into that zone has finished and a new trend trading us in the opposite direction is ready to take place. So I mean, you can see here, this market has been trading us in a bearish way anyways for some time. So it was just looking for areas of supply, areas of interest to obviously get involved in the next leg that takes us lower. My target is to obviously see price trade through and beneath this last low here. My end target is this area of demand here before I want to see any kind of bullish reversal. So realistically, if we wanted to not almost guarantee a take profit hit, but if we wanted to make our take profit more likely to be hit, we could place our take profit just above this high, just above this low here, as we suspect we want to see that low break to create a new lower low, as those are the laws that are followed in bearish structure. But I have actually stretched my take profit to this point because I want to see that demand zone being hit. But yeah, essentially, just wanted to see price pull back, pull into an area of interest. I then went down to the fractal timeframes, looked for a structure break. I think I went as low as like the 5 and 1 minute. Quite not preemptive as such, but I was quite aggressive with my entry. You can see here it was like it was like a 1 minute. I think I literally waited for price to trade in.
And do you have a preferred time frame that you're looking for a structure break, Luke? Or
obviously, the higher the time frame, the better. Definitely, if we have a higher time frame break of structure, just like this one here, that obviously gives us a stronger belief that price is definitely ready to trade as lower. Because realistically, when we're looking at the lower time frames, as low as the 1 minute, we see structure breaks and contradictions in price action all the time. Do you know what I mean?
Yeah.
So absolutely, this is why I was saying, my entry may have been slightly preemptive and quite aggressive, but it's played out really well. And I still waited for a structure break. So it's not as though I just jumped in on the trade. I still waited for a penetration of an area of interest, breaks of structure, pullback. I waited for multiple breaks. You can see here, we had a break of structure, price pulled back and into, I think on the 5 minutes, you can see a bit more clearly. There was an unmitigated area here as well. Actually, it must be on the 15 minutes. Maybe let me just double check. Yeah, the order box shows itself properly there. Price traded in, and then I think there's a fair value gap as well, which I'm yet to make a video on for my clients. But there's a fair value gap here on the 1 minute. It's a nightmare going back like this, isn't it? I should just read that. But yeah, price traded in.
Your pain, Luke.
Yeah, exactly. We had another break of structure, penetration of another area of interest. I saw rejection and just got involved, basically.
What do you mean by a fair price gap, just for our viewers, Luke, if they're not familiar with that term?
So fair value gap is basically it's just looking at the gaps in a market. So you can see, like, for me, to be honest with you, like I'm yet to make a video on it myself, but I believe that the markets follow two things. They're either looking at supply or demand, or fair value gaps. So for me, like, I'm relying on price trading into, like, this would be considered a hidden order block. We've got bullish presence within a bearish leg lower. Price has not come to mitigate this area. This whole area is inefficient structure. Hence why, because we have this low set here. So it's based on 3 candles, isn't it? We have the low here that's been set, and then we have the high here of this 3rd candle. So the second candle in between, this gap, that's what we're looking to see price trade into. And then obviously I have a 50% line marked out with all the zones that I mark out. Want to see price trade into that before any kind of rejection, and that's what we saw. It was perfect. And then price traded into an unmitigated order block on the 1 minute time frames as well, which was amazing. So we saw that rejection to the downside. I entered straight away, and yeah, as I say, price is playing out really well. I took a partial the other day, I think at 2 RR. I usually wait for 3 RR, but I wasn't seeing much movement, so I took a partial yesterday, I believe, for like 2 RR. Just to bank some profits, eliminate some risk from the trade, and now I'm just going to leave it to run. I think it's running at the moment. Let me see. Yeah, 1 to 5 at the moment. So that's
nice.
That's great.
Yeah, very nice. And coming down nicely.
Yeah, that's what I'm in on at the moment on AUD USD.
What are you looking for once you're in a trade? Are you looking for that structure trend to continue? If price starts pulling back, it's no problem. What about if you've got a structure break, something like that on the H1, or would that play into this idea of this trade?
Yeah. So obviously in this instance, we're seeing clear bearishness, which is brilliant. So I've not kind of been delivered with anything to suggest price is reversing. But if I did have like a higher time frame structure break to the upside, I would probably, I would move my stop loss to entry anyway, just to eliminate any risk of the trade going bad. But we can also look at trailing stop losses. So, I mean, realistically now, just looking at this, get my path tool. We could say, if we go from like here to here, let's say, we would say, well, this is clear bearishness, right? So, I mean, realistically, I could move my stop loss just above this high here, because I don't want to see this high break. I want to see a continuation in bearish structure. And if that high breaks at this moment in time, then that's probably suggesting that my stop loss at entry could be hit. So I may as well trail the stop loss. So yeah, we could probably look to trail the stop loss here on this trade as well. Yeah, I think more than anything, this is the issue as well. I was speaking to, I've got a community chat within my VIP chat, and I feel like that's so beneficial for the clients in there, but also it's also good to liaise with people and see where people are at. And this morning I was speaking to one of my clients, and they were saying, you know, they were talking about a trade that they had running, and managing the trade, I think, is a struggle of theirs. And I think that it's almost more important than actually finding a natural trade. You know what I'm saying?
Yeah, so I would agree. Yeah.
Managing the trade correctly is it's definitely something that we need to take seriously, and we should be practicing our strategy and plan thoroughly, not just before the trade, but during and after the position that we place.
Yeah, sure. And I would say trade the chart, not what you want. You know, I might want a risk to reward of 3:1, but you know, if the chart is, you know, structures breaking down, exactly. You know, trade the chart, not what you want.
Yeah.
So yeah, all right. But Aussie dollar, US dollar, then nice trade, Luke, coming down nicely.
Yeah.
And guys, don't forget, you know, take advantage of Luke while he's here. Ask him as many questions as you like about, you know, anything to do with trading, and also, you know, any currency pair you might be in as well, guys. So let's just say hello to a few guys. Skelps, how are you? Brett, Gavan, investing with Ian, Michael, Colin, Brett, how are you guys? Welcome to the live stream. We've got 20,000 subs. Just wanted to say that one more time. So we've got a question here, Luke. So from Brett, roughly how long are your trades running for? How many trades per week does your setup give you? Would you class yourself as a swing trader?
Okay, so roughly how long do your trades run for? It completely depends on the actual setup itself. When you say about, do I class myself as a swing trader? I'd say yes, swing trader / day trader. Again, it depends on the actual setup. The beauty of how I trade and the analysis I perform, I always complete a full top down. I would do this every Sunday, and then I adjust things every morning before I go through my trading day, just to, you know, adjust anything that needs adjusting. But the beauty of it is I might have a setup from a higher time frame area of interest, which means the swing is going to be longer, so that trade may take longer to complete. I may get involved on the lower time frames on a position, and that will give me the opportunity to be in and out within the day. It completely depends again.
Yeah.
But ultimately, with my strategy and how I do things, I am looking for. Can you hear that? It's a bit of a.
Yeah. I think that's outside. Yeah.
What's that? No, for me, like, based on my strategy, I'm looking for 3 structure breaks, 3 areas of interest to be penetrated. Those are like my confirmation parameters, and obviously trading with the prevailing trend. So if I get those on the higher time frames, brilliant. If I get them on the lower time frames, great. It just, as I say, it depends on the trade. But in terms of trades per week, they vary completely. Some weeks I don't place a single position. The markets might not always give me a trading opportunity. Some weeks I might place 5. Do you know what I mean? I think what I've learned over time is don't force trades, and wait for setups to play out. How, you know what I'm saying? Wait for setups basically. So
come to you almost, rather than chase them.
Exactly that. I think that's just part and parcel with understanding the psychology in trading and being in tune with your emotions. A lot of people have the fear of missing out, so they might force a position, and 9 times out of 10, it doesn't go in your favor. So you're best to just wait for things to play out as they should.
Yeah, sure. Couldn't agree more, Luke. And Brett says thank you. And what else are you looking at, Luke? Are there any other trades or any potential setups that may be materializing that you haven't entered yet?
Yeah, so I've got the Euro US dollar. So this is another market I wanted to go short in. Again, this suggests strength in the US dollar. Again, I could actually go through. I think this was a video that I was making, which is why there's all that. You can see here that we have had a breaking structure here. So let me just zoom out, actually. Get rid of some of this stuff. I think this is probably an example I was doing for someone. Yeah, so basically, we are seeing that price is trading us in a bearish way. Okay. Again, we would say this was the last bearish impulsive wave, and what we are seeing at the moment is price within a bullish correction. All right. Price has actually traded into, I believe, an area of interest here, but I've not marked it out. Be somewhere within here. I'll have a look in a moment. But what we are essentially seeing is that price was trading us in a bullish way. And what we've seen is the last protected low within this bullish structure. We've seen price break beneath, which would suggest that the supply and demand balance has flipped. Supply is now in favor of demand, and that we may see price traders in a bearish way. So once we have that breaking structure, we obviously look at the impulsive wave that has broken the structure to try and find another area of supply that price can trade up and into to set its first lower high before a continuation lower. And that's what we've seen. We saw price come to trade up, correct itself. We look at the last protected low again within the bullishness. We've broken that. So the second break of structure confirms the end of the initial correction that follows after the initial break of structure. And then, yeah, now we are literally seeing price. We just follow the same 2 steps, essentially. Look at the most recent impulsive wave, find areas of interest, price trades in, break of structure. We do that 3 times. So we've had 2 breaks of structure now. We've had 2 penetrations, this being the first one, this being the second. Again, I've not marked out, but there will be an area there that I need to mark out. And then we are now seeing price trade into the third. So this was something, I actually did send this out into the VIP chat last night. And we are seeing that price has traded us into this area of interest here and has traded us lower. So my entry now would come from going down to the lower time frames and doing the exact same thing that we've already done. So looking at the structural lows within this bullishness that's traded us into this area of interest, waiting for that to break. So probably be in this here. Because in fact, actually, let me have a look. Let's just go back. Let me just delete that. This high came higher. So, okay, so maybe not actually. Let me go down to the 1 hours. This high has come higher than this one, so I'd say this was the last protected high within the bullishness, and this is the low that created it. So realistically, I want to see this low break. Once we have a break in this low, we then look for a correction to trade us in, and then we get involved in those short positions. So it's very important that we obviously look at the last protected low. You know, if we're going bullish to bearish. And then obviously the opposite applies. So if we're going from bearishness to bullishness, we want to have a look at the last protected high. And this would be considered the last protected high. In this instance, this is the low that created it because this high is the highest high within this bullishness. So yeah, I obviously want to see that break, correction, and then we can get involved. So we should be getting involved in short positions very soon. I know there was a client of mine that actually got involved just based on a penetration and rejection, which is fine. But for me, I like to see 3 breaks of structure, 3 penetrations of supply zones. I've had 3 penetrations of supply zone, but I've not had my 3rd and final break of structure yet. So, which is that line there. And once you get that 3rd and final structure break, Luke, so on this chart here, because sometimes price breaks out and it doesn't retrace and it just comes hurtling down. Yeah. Is there ever a situation where you trade a breakout, or are you always looking for a retrace back into value? Yeah, I'm always looking for some kind of retracement. Yeah, but no, that's very true. And I was speaking to James, who works with me with early GFX, and he was saying that he came across something actually, which I still need to liaise with him about, because this happens sometimes, which is a pain because you're waiting for a setup and it's playing out perfectly. And then it's like you're just waiting for price to just pull back into an area that you can get involved in a refined entry, and then it never trades back, and that's just because so much supply or so much demand has been introduced, and the opposite has been offloaded, that we just see that, it's institutional control, isn't it? So we see this large movement, which we can expect, but there's nothing worse.
You've been waiting for days and then it just shoots off. You're like,
it happens. So I mean we could trade a breakout. So obviously if we see price trade beneath this, then brilliant. And then I'd probably want to set my stop loss above these highs, but look at the size of my stop loss. Like I'm the type of trader that has quite tight stop losses. Now obviously if we compare it to where our take profit would be, I would obviously set my take profit just above this point, which is brilliant, and we still walk away with a 1 to 3, but the majority of my positions are 1 to 5 plus. Do you know what I mean? And that's just how I am with my entry. So this trade here, I mean, that is something we could place. If we have a break of structure now, we could place that. But I just wouldn't. I would want to see price come to correct itself.
Sure.
And that in itself acts as a bit more of additional confirmation, because then I'm thinking, well, because price is broken and protected low, it's obviously showing signs of bearish structure, so it should, in theory, come to set a lower high again fractally, and that's where I can enter in from. So, yeah.
And would you even consider building a trade? So let's say you got the break, you wouldn't go in with your normal trade size because of that stop, but you could still take advantage of the trade if it comes tumbling down. You're still in the trade, but not at full size. And then if it does retrace, you can always hit it with more size as well.
Exactly. That's definitely, no, you're not wrong there. It's not something I've even considered. But I mean, that is definitely, I don't see why not, years ago when I first started trading, people were, like, it was like 1 to 2 trades, 1 to 3 trades. Like they were like, that was a good setup. Do you know what I mean? But I think now with smart money concepts and, all these fair value gaps and order blocks and, the way Forex is going, like we are able to have these crazy risk reward ratios on positions. Do you know what I mean? So it's kind of like, what's the harm in a 1 to 3? Because there isn't, like, I mean, if the setup is there, why not? So you're absolutely right. Maybe I should, even if it's a 0.5 risk. And then if it trades into a zone, then I can apply my additional position. You're not wrong.
All right, good. And guys, don't be shy. If you've got any questions to ask Luke, come and pick his brain, ask as many questions as you like, guys. Also, I'm going to point out right now, if you haven't joined our trading community, then why the hell not? It's free. There's like-minded traders sharing knowledge, ideas, experiences. So come join that, guys. Come join the free Discord channel. We've also got the VIP Trading Academy, where you get access to me throughout the trading day. You get our trade signals, and you get access to numerous tutorials, guys. All right, so come check that out as well. Also, guys, if you would like to be coached one-on-one, then drop us an email. We'll send you the details of the mentorship program. And finally, guys, if you would like to become a Simply Forex member, show your love for the channel, then you can, and there's many perks for doing so. Also, guys, don't forget our sponsor today, My Flash Funding. We can get you 25% off any prop firm challenge right now if you use code SIMPLY. All right, guys, check it all out. It's all in the video description. So, Luke, there was another trade you were potentially looking at, but you said it was sort of contradicting what the Aussie dollar, euro, US dollar concept. So if you could perhaps explain that and why it is contradicting potentially.
So I mean, it's contradicting in the sense, I suppose the US dollar isn't a quote in this. So what is the euro is obviously the base currency. So I'm wanting to see strength in the euro in this pair, whereas I'm wanting to see weakness in the euro to the US dollar. So, I mean, here I want to see price trade up and into this order block before we see price trade lower. I did actually want to see price come to correct itself. So this was, again, some analysis that I did yesterday for the guys. And I marked out this area of interest. I wanted to see price just come to trade into this, clear any remaining demand in order to continue seeing price trade up. Doesn't look as though price has even come to trade into that, so that's fine. But yeah, I wanted to basically see strength in this pair, whereas the euro dollar weakness. So it's somewhat contradicting itself, I suppose. We are looking at two different quote currencies, but yeah, that's my thoughts with the euro AUD anyway. I do want to see price trade up and into this. We have a area of supply, and then I'd like to see price obviously deliver us with the confluence and confirmation we need to obviously go short in this market. Just on the basis that we've had a break of structure here. So we've had a break in the last protected low within the bullishness that has been trading us up. So yeah, I would like to see price start to break down, and I feel price may come to set a double top here before trading lower, but we'll see.
Sure. And if you were to trade euro Aussie dollar long, would you want to see a break? It's almost like a bit of a range there on the daily chart.
Yeah.
You want to see a strong break of that level with a daily candle, or you would be willing, there's enough bullish structure there to look for buys already?
What, from this area here?
Yeah, I mean, if it didn't break these highs, and also that wick just to the left of that, if it didn't break that entire zone and come back down to your value zone, would you still buy that, or would you want to see a break of those highs first?
I would still buy it. Yeah. So for me, like, if price just came and reversed from now to trade into this, delivered me with a fractal break of structure to the upside, I would be looking for entries regardless of a break in this high here.
Okay.
Yeah, because I mean, in theory, we're looking like an impulse here, a corrective wave, and then this would be like the next impulse, let's say. So what we are basically seeing is price is just doing what it needs to do, as it would be here, where you can see the market was quite choppy. It was always trading us higher, but it's quite choppy up and down.
Yeah.
We'll just be seeing that there then. Do you know what I mean? It's just clearing areas of liquidity before trading us higher. So yeah, regardless of a break here, I would still be looking to go long, as long as price trades us into this initially. It gives us the right information to enter.
Yeah, sure. Okay.
It's a very good point.
Yeah, just I'm always looking for basically structure breaks, as you are. That's like my number one thing. It tells us, indicates that a market is building up or breaking down, and there's no better indicator than market structure breaks for me.
Exactly that. Yeah. No, absolutely. Yeah. Well, that's it. I have another client who was quite heavily dependent on indicators, and I don't frown upon them, and I don't think they're bad things, but I think they're I think we should look at the price action in a market before we go and see correlations between our analysis and indicators that we use. Lagging and leading indicators just should be there as confirmation, if anything.
Yeah, exactly. Just a piece of confidence. You've got to be able to read the charts, read price action, and then if you use an indicator to support your trade idea after you've read the market, then all four indicators in that respect, but even then they're lagging, unless you're using fibs, which is real-time data really. Even some of them can be a little bit subjective depending on what high and low you use. And moving average 20 is about all I use really. More from a visual thing,
Exactly.
and it's the mean of the market. It's the average. The price wants to pull back to the mean, So that's all I use really.
Yeah.
Did you go through a spell of using indicators, Luke, and then because for me, when I went through looking through a million indicators, these were my dark days.
Oh, 100%. Yeah, I feel like
was just plowing through one indicator. I wouldn't have a winning trade immediately. Next indicator, next one. You know.
I think that's definitely a journey everyone probably goes through. They see all these cool lines everywhere and these things that are supposedly giving them answers, and it's like you may see some kind of result, or you'll do your back test and you'll be like, oh my god, it works, and then you'll be so reliant on it the next time, and it's like, So no, I always definitely I definitely went through that spell myself. Yeah, absolutely. I used to use. I would use everything. I would use Bollinger Bands. I would use the MACD. I would use RSIs. I would use anything and everything I possibly could to looking at divergence and things like. I would use everything. But now I've just, like, you'll see, like my charts are extremely naked, and I much prefer that. It gives me a sense of, I don't even know what the word is, like it's not
just clarity, really.
And it's clean.
Like clarity. Yes, clean, exactly. To give you an idea, I even got into Ichimoku clouds. That's how dark I got. I was trying everything.
I mean, there's also strategies and things out there as well. Like these, like, it's all crazy, but you have to fish through, and you have to kiss a few frogs before you find your prince.
Exactly. Yes, good analogy. And did you also find, Luke? I also found this. So when people first start trading, you want like an immediate reaction to your trade. So what that leads people to do is trade the lower time frames. So I coach a few people now as well, and they all basically started on like 5 minute, even 1 minute, some of them 5 minute, 15 minute, and that was their main focus, just trying to get as many quick pips as they could out of the lower time frames. Did you find that was the case for you? You started on the lower time frames and your view got bigger and bigger?
Yeah, I'll be honest, like when I first started, like I was so like, because you've got to remember, like, it's crazy as well, because when you start coaching people and when you have mentees, you kind of like, you have like this realize, and you're like, oh, I know a lot. It's like, without blowing smoke, do you know what I mean? Like you do, like you like, there's such a journey you go through, and like, I think for me, like when I first started, I didn't even, time frames wasn't even like a subjective, do you know what I mean? A thing that I felt was important. There's so many things that come into Forex, and for me, like I think my focus was maybe like the 15 minutes. Do you know what I mean? Like a 15-minute time frame, and you quickly realize that concentrating. I use the term over fractalization, which is like a term that me and James made up, and it's like, if you are too honed in on the lower time frames, you're gonna, that's just, you're setting yourself up badly there, because as I said earlier, we could see a 1 minute break to the downside followed by a 1 minute break to the upside. Like those time frames constantly contradict themselves, because it's
in the space of 15 minutes you could see that
exactly, and it's because it's setting itself up for the higher time frame. So 100%, I would always work my way down rather than working my way up.
Sure. And I couldn't agree more. And what else, what other things you sort of learned along the way that you wish you hadn't done? So we spoke about, getting caught up in the weeds on the lower time frames, and now you look at the bigger picture first, which makes perfect sense. Indicators, they're a slippery slope, and you can just go from indicator to indicator. Anything else that you think would be helpful to the viewers, and pitfalls not to fall into?
I think risk management is key. Not over leveraging. Risk management is another one. When I first started, again, I didn't feel as though it was important. To be honest with you, I didn't understand the difference in lot sizes and things of that nature when I first started. It was only after I had blown an account and things like that I'm like, why have I lost £50 on this position, but I've lost 500 on this one. Do you know what I mean? And it's,
Yeah.
you know, so and a lot of people, again, like I have a new client that signed up recently, and they said that they lost the position on AUD USD, but then they won one on, I think it was Euro USD, based on some analysis that I gave out actually, and I was like, oh, that's brilliant, because he showed me the thing, and I said it was four RR trade there and a 1 RR trade loss, so you're still 3 RR up, right? So if you are risking 1% for every position, or risking a set percentage for every trade, you should be 3 RR up, which could be 3%, 6%, you know, depending on your risk. And he was like, oh, well, I'm actually down a little bit. And I'm like, it's because his stop loss was larger, let's say, on the losing position than it was on the winning one. And he was using the same lot size for both. So, yeah, it's very, 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 very important that we adjust our lot sizes accordingly to the trades that we're placing, and we stick to a set risk, basically. 1-2%, whatever it is, 0.5%. Risk management is definitely up there, and something that I disregarded when I first started.
Sure. And then obviously we've sort of spoke about risk management there. We've looked at your strategy and what you're looking for, Luke. Just sort of finally, you know, the side, because we actually had an interview with a psychologist yesterday, and it was really interesting. But I just wanted to get your perspective on, you know, how do you get is there a routine that you do to get yourself in a mindset, or you're not really one for that, or, you know, what's important for you psychologically when it comes to trading?
So I think it's very important to have a trading plan. So steps that you follow, you know, as I said before, like, it's very important how you manage, manage the things you do before placing a position, during and afterwards. So there's always set criteria that I follow throughout that process, that 3-step process. And I think it's also very important for you to have a clear mind when you come to the markets every day. So I think your personal life kind of, I wouldn't say, you know, obviously everyone has things going on, but I think it's very important to start the day right, and that your personal life isn't affecting your mindset or the decisions you are making and things like that. Like, I'll be honest with you, like I go to therapy every week. I have schedules when it comes to like my psychology and things like that, because I like, and not so much meditate, but I put myself in that state of mind where I do have a clear head. Do you know what I mean? So, because I think it's very important to do that, because as you say, like, you can so easily make impulsive decisions, because the markets are behaving in a certain way. So I think, it's extremely important to have a clear mind. And for me, I'm very good at following steps and a guide, and I just have my steps and my guide and my plan when it comes to trading, and I just make sure that my personal life and my outside life doesn't come into work life.
Sure. And again, it's almost the plan, to a certain extent, takes care of the psychology.
It does.
Absolutely. Do you know what I mean? Because there's no grey zone. There's no grey area. You're like, this is what I do, you know, and I couldn't agree more. You know, I know what I'm going to do with a trade before it happens. Yeah. You know, if this happens, I'll do this. If this happens, I'll do this. You know, before the market is
That's literally, because, and so many times. Do you know what I think? The reason why people make impulsive decisions, or decisions like uneducated decisions like that, is because they are not confident in they're not either confident or they've not followed the steps they should have done before placing the trade. Do you know what I mean? Like, if you're placing a position and you're looking at it and you're worried that your stop loss is going to be hit straight away, did you really analyze that pair properly? Did you wait for entry confirmation? Is your stop loss in the place it should be? Do you know what I mean? So these are the questions that you've got to ask yourself. Why am I having these thoughts, and why do I want to close the position early? Why am I not so confident? And it's probably because you've missed something out in your trading plan, or the steps that you should be integrating.
Yeah, sure. Yeah, good. All right, thanks, Luke. And we got we'll ask one question here. I haven't heard this myself, but Gervan said, there's a saying I've heard before, try avoid trading euro US dollar because it's the most popular, that makes it the most manipulated. Is there any truth to that? Personally, I hardly ever trade it.
I've never really I've never really come to no. I mean for me personally, I think it's each to their own, isn't it? People have preferences. I don't trade the Japanese yen. I avoid trading the Japanese yen. I think it's so hawkish. I just like and just how it plays out in the markets. People like certain things and people like certain markets, and yeah, I mean, I don't know. It is a popular pair, definitely. It's probably the most popular pair, as you say, but it doesn't impact how I trade or anything like that. I just simply wait for confirmation and my setups to play out, and I place the position. It's so good, like having that. I think this will all come in time as well for people who are new. Like, it will all come in time, but when you see like profitability and like consistency over a long time, you kind of become one with yourself and almost confident in how you trade and things like that. So like, I don't get upset when I lose a trade. Do you know what I mean? I don't get upset when I don't get overly happy when I win a trade. I'm literally just executing an edge, rinsing and repeating the same thing over and over and over again. And I understand that it will work. Sometimes it won't, and sometimes it will. It's like pulling a deck of cards, and you know what I mean? Eventually, you're going to pull the cards you want. Yeah,
exactly. Yeah. You know, in the space of a year, your edge will play out. Even 6 months, your edge will play out. You know, some people beat themselves up. Oh, this month I'm minus 1% or break even. It's fine. You know, next week you could have an 8% month. You know, you just have to trade when your setups present themselves. Keep within your risk management. Keep your psychology on point, and that's your edge. And in the long run, it will play out, you know, in your favor.
Yeah, no, absolutely.
And to give you an idea of currency pairs, I had a trader that I knew. He only traded Aussie dollar, New Zealand dollar. Imagine that, how slow that thing moves.
I know.
But he liked it because it always reverted back to the mean. So that was his reasoning. He didn't give me any more reason than that, but it always reverted back to the mean. And he said it's so simple to trade for him, you know, and he just become at one with Aussie dollar, New Zealand dollar. Other people like myself want to look at many currency pairs and filter them down. You know, each to their own, many ways to cook an egg.
Exactly.
No more so in trading. Luke, we'd like to thank you for your time, Luke. And guys, if you've enjoyed Luke's analysis, Luke's insight into trading, which we all have, then please go check out his channel LAGFX. The link is below. He gives weekly analysis, daily analysis on there, so please check it out, guys. Also, Dances with Wolves. Ayo, Tom, my dude, 20,000 subs. Wow. Indeed, we're going to mention it one more time. 20,000 subs. Woo-hoo. Thank you guys for making it all possible. Luke, thanks once again for your time, and we'll see you all next time.
Thank you for having me.